What is good, guys? It's Rey-Jay back with another video. And in this one, I want to break down what's going on with Tesla, SPY, Nvidia, the QQQ, and a couple of other tickers. I'm going to break down what's happening with the overall markets thus far, and also talk about why tomorrow is going to be an absolutely wild day because we have the FOMC meeting and Jerome Powell giving a speech. So I'm going to break down the data in more detail, show you guys how you should be looking at it, and then I'm going to talk about what I think could end up panning out on the charts because there's a very good chance that what I'm about to talk about is going to play out, in my opinion. But before I begin the all this information, before I give you guys any predictions or talk about Jerome Powell and what's going on with tomorrow, let me just mention a couple of things. I am firstly not a financial planner, so take nothing I say as financial advice. And also, if you guys can, please check out the Moomoo link, which is down below and in the description. If you sign up for Moomoo with the link down below and deposit $100 into the account, you are guaranteed 5 free stocks. If you deposit $1,000, you're guaranteed up to 15 free stocks, and the offer ends very, very soon. Anyways, let's talk about the market. What on earth is going on? So for today, SPY basically gapped down, and we got this bounce right off this support, very close to 508.5. Then SPY made its way all the way up towards this resistance, which is from yesterday. Now, SPY actually pushed a little bit above that. The chart does look a bit more bullish. It could push a little higher, but whether or not this continues for the rest of tomorrow, even going into like the next few days, is going to be more determined by Jerome Powell, the Fed, and what they're about to tell us. So I'm going to be talking about that in the next couple of minutes. Then I'm going to break down what the charts are basically suggesting. So why is tomorrow such a big day? What is so big about tomorrow? What's so significant? And here's the answer. Tomorrow is Wednesday, March 20th, 2024. Okay, there's not much data coming out in the morning. Everything is very, very minor when we start off. But then all of a sudden, things are going to go crazy starting at 2 o'clock p.m. Eastern Standard Time. Now, the first piece of data is going to be the interest rate hike decision. It might cause a move in the markets, but I'm not thinking it's going to be that significant because right now there's a 99% probability the Fed is going to keep rates the same at this current target rate. So that's not really what's going to be too crazy. But once again, there might be some volatility at that time. But what's going to be more crazy is going to be this report right over here. So at 2 p.m. Eastern Standard Time as well, we have the FOMC economic projections coming out. That's going to be huge. Okay. Why is this so important? What does this mean? Well, when you look at the chart right here, this is what the projections essentially are. And you could see as time progresses, right, as we go rightwards on the charts, we're basically going forward in time. The Fed is basically anticipating that rates will start to drop. And this is what the Fed members are basically thinking. You guys can see the dot plot right here. So they're anticipating some cuts to be coming even by the end of this year. They're expecting a couple of cuts, maybe a couple of cuts to bring the overall target rate down. And we don't know if they're going to be cutting that much. Are we about to see 1 basis point, not 1 basis point, 100 basis points or even 75 basis points worth of cuts? Are we about to see that many cuts this year, or are they about to reduce it? And that's what's very important. The issue is when you look at the last inflationary data, if you look at like CPI, if you look at like PPI and stuff like that, inflation is at risk of going up again. So the Fed is in a position where they can't really be way too dovish. They can't start to say we're going to ease on policy, we're going to start cutting more because inflation is starting to come up again. We're seeing some risks of this in the data, and they're not at their current target rate just yet. So that basically means that the Fed is being incentivized to keep rates either the same during this next meeting, and then simultaneously for their future projections, they're incentivized to either keep the projections the same or cause them to go up. What this means is in the future when the data comes out, if the projections start going up, if this line right here actually is not pointing at rates dropping as much for the next 1 to 2 years, if it's a little bit higher than that during the next revised dot plot, this means the Fed may have to be hawkish for longer. The Fed may have to keep rates up higher for longer than expected because of inflation. If the Fed makes that announcement, if they give us a revised dot plots and there are more dots like above than below, right? Just like right here, we're seeing a lot of them are below. If they revise this and they're showing that they have to be more hawkish for longer, that is going to cause the market to get rug pulled, in my opinion. And there is a risk of this looking at the current data. So you want to be very, very careful. Now, it's not guaranteed, of course. Nothing is guaranteed in the markets. I can't make any promises. Are they going to keep this the same? I don't know. But there is a risk of them either keeping this the same or even increasing their projections instead of decreasing them. I think that's a lot more probable. So, in essence, what this means is the data coming out for tomorrow at 2 p.m. is going to be key, and that's going to cause some high volatility. That's going to be the big thing, the FOMC economic projections. And then at 2:30 p.m., we also have the press conference. That's when Jerome Powell then opens his mouth. So I think it's just going to be wild. Who knows what he's going to say? But he is being incentivized to be a little bit more hawkish. That's what I'm starting to see. I don't think that he's in a place where he's going to say that we're going to be cutting, we're getting ready to cut. I don't think the Fed is ready to ease just yet, looking at the inflationary problem. They're going to be waiting, and there's a chance they may have to be a little bit more on the hawkish side. So what does this mean for SPY? Honestly, guys, whatever Jerome Powell says, whatever the reaction is, could be very nuanced. I'm open to both possibilities, and you should be open too. But I'm going to give you guys my prediction. So, firstly, what if we're bullish? What if we're bullish? What if Jerome Powell causes the market to pump? Hypothetically, right? I do think that's unlikely, but if we were to be super bullish, you want to see SPY continue to push and eventually break the all-time high, and we could be on our way to at least 520 plus. A move to 520 plus is coming if we're bullish. If we're bearish and we get the rug pull, okay, SPY could come all the way back down to 510 or below that. What do I think is going to happen? Here's my prediction. Now, I don't know what Powell is going to say. I don't know what the data will entail with 100% certainty. I don't know for sure, so I can't promise this, but this is just what my best assessment would be. I have a feeling that there's a trap in the markets where they're going to continue to push SPY a little higher, may even come to this imbalance close to 517 or so. Then we might just see a lot of choppy price action. And then, when the FOMC economic projections come out, I have a feeling that this is going to show that the Fed is anticipating less cuts than before over time, and they have to keep rates higher for longer because of the current inflationary data. And I have a feeling that that's going to cause the market to sell off. So I think the most likely possibility is we kind of pump in the morning, consolidate, and then when the data comes out, we start to sell off, and then Jerome Powell gives his speech. We just continue to see a sell off all the way back down to 510 or even below that. And we could even drop much lower depending on how high we are by the time the meeting starts. So in the morning, we might push a little bit higher. They might see some consolidation and some upside. But then when all the data comes out in the afternoon, there might be a big rug pull. That is my prediction. I could be completely wrong, guys. Don't solely trade based off what I'm saying. Make sure you watch the charts. But I think that's very, very probable. On the QQQ, I'm seeing a very, very high probability that the same thing is going to happen. So we have this resistance right here where this trend line happens to be. If we're bullish, you want to see this thing break past 440, then eventually 442 and 444. If we're bearish, you want to see this thing get a rug pull, reject from here, come back down to this imbalance at 436. And if we lose that, 434 is coming, followed by lower levels. Now, in my opinion, I think there's a very, very good chance that this might attempt to push a little higher, might push a little bit higher, could make its way closer to 440, consolidates a bit. And then when the FOMC meeting data comes out, either we get a big pump all the way up to 444, or we get a big rug pull all the way back down to 431 or even below that. Let me just call out that on the QQQ, and first thing on SPY, we have this gap down here that's unfilled. We have a gap way down here at this 509 area. And there also happens to be a big gap all the way down towards the 497 area. So there could be a rug pull coming. We'll have to see about those targets later. But like I said before in my videos, don't be a true big bull or big bear. Just wait for the data and then react to that. That is the best way to go about things. On the QQQ, if this thing does get that rejection, one could argue that we have a very, very bizarre looking head and shoulders like structure. I wouldn't really solely trade based off that, but it kind of looks like one. And simultaneously, we have a lot of gaps below to fill. So I'd be very, very careful with this. And I know that Jerome Powell could do the unthinkable. So there could be a rug pull. So just be careful with that potentially coming. It's a little bit more probable based off, I would say, just based off the reasoning from the data, but nothing is guaranteed. For Tesla, let's talk about Tesla. If we're bullish on Tesla, if Tesla gets a big launch thanks to the FOMC meeting, and if we get good news and etc., we could see Tesla try to push its way back up towards 175, then eventually 178, and eventually 180 above that, all the way up to 180. We could go for a very, very big push if we get good data and if the Fed is not too hawkish. If the Fed is hawkish and we get some bad news, we're currently very close to this 172 area. We have a gap to fill all the way down towards 164, and then we have support at 162. Tesla could pump and get the rug pulled. That's another possibility for bearish. What do I predict is going to happen? Here's my best assessments. I think Tesla may push up to fill its gap, consolidate a bit in the morning as the market pumps and pumps, and then when Jerome Powell not Jerome Powell, but when the data comes out before Jerome Powell and Jerome Powell's speech come out, there's a high probability we get a rug pull and Tesla comes down to fill this gap. That's my prediction. I could be wrong, guys, but I find this to be very, very likely. I think the whole market's going to follow this trend. With the events that came out for Nvidia, we got a nice bounce today, but we're still on a slight downtrend on the chart. Going into tomorrow, it might push a little bit towards that 900 area. If it does break this, we could go to 908. Breaking that would be a lot more bullish, but I think it's going to pop a little bit and come back down. For support, watch 885. If we lose this, we have this nice imbalance to fill down here. I think it might push a little bit, consolidate. Then very, very soon, we might see this big rug pull all the way back down towards 850 or even below that. I think there's a risk of that because of the current trend and because of the current status. So just be very careful, and then we'll see how it goes from there. But remember, Jerome Powell and the Fed could give us that rug pull. On Apple's on an uptrend. The chart looks bullish for now, at least technically speaking. If good data comes out, if the Fed launches us up, we could be pushing for 180, 178, and 180 above that. If we don't get a launch up thanks to Powell and the Fed and we come back down, Apple could sink all the way down to fill its gap, which is way down here into this like low 170 area. What is more probable? Well, it's very likely we kind of push tomorrow, consolidate, and then we see a big rug pull thanks to the Fed. So make sure you're prepared for that. Make sure you're very, very careful. I'll break down how things go later on. That is it for the main five. Now let's just break down some more charts. What could end up playing out for Rivian? If we're bullish, you want to see it break 11.6 and eventually push up towards 12. If we're bearish, you want to see this thing basically lose 11. If we lose that, we could start sinking towards 10.5. In my opinion, I think there's a very, very good chance that this thing could kind of like get a big rejection and come back down. We could pop first and then eventually come down later. I do favor that possibility, but just to be safe, let's watch our levels. So far, it's going to be heavily dictated by the data coming out for tomorrow. If we get good data, we can push for at least 7.39 or higher. If it's bad data, we're going to be on our way to 6.5. So just be careful. SoFi has that risk. And I do favor kind of like a pop and a drop like move, a drop later on in the afternoon thanks to the data. So be careful. For ARM, I'm seeing the possibility that this thing could try to rebound, test 127 if we're bullish and start pushing higher. And if we're bearish, you want to see it lose 121 and start pushing back down towards below that, which is going to take it all the way down to very low levels like 115. I do favor it coming down towards the 4-hour 200 EMA at 116 to 115. I do think that's more probable if we do get that rug pull, so just be careful. But we'll have to see how it goes from there. Onto super micro. If we end up losing 850, there's going to be a bigger drop coming towards 800, then eventually 750. If we're bullish, you want to see it break out towards 1013. Overall, guys, I would just say that the chart is looking a bit more bearish, and there is a risk of this kind of pushing in the morning, maybe getting closer to the mid 900s, then coming down later. I do favor that view. For Palantir, if we hit 24.44, and then that's going to be like a one potential target. If we reject off that, we could start sinking back down to 22, then lower levels like 20. And if we start dropping here, we could be sinking all the way down towards the lower levels as well. I think it might pop and then drop back down, and there is going to be risk of it coming back down closer to about 20 as time goes on, because the chart is looking bearish to me. For the IWM Russell 2000, looking a little bullish. It could push higher towards the imbalance. Either 203 to 205 could come. But after all the data is out, be careful, because if we do pop a bit, we could make our way back down towards 200, if not 198. So the most likely possibility is kind of like we pop and drop. But just to be safe, let's see what the data tells us. For Microsoft, it's trying to push right here, trying to refill this imbalance. It could try to push tomorrow. If we keep breaking out above the highs, we could get closer to 425. But then once the data comes out, if we remain bullish, we could be pushing for 428. If we're bearish, we could come back down to 414, if not 410. My best prediction is that we kind of push, then come back down after the data comes out, all the way back down towards 414. For AMD, it's the same thing. We're going to be looking at resistance at 188. We also have support right here at 177. If we lose that, we're going to be coming down towards even lower levels. There's a lot of bearish momentum right here. We could keep sinking. But basically, we have like 160 as a critical support. We also have support at 172. I would say that's the most likely possibility. Is we try to bounce tomorrow, retest 188, and just consolidate. And then we might see a big reaction after the Fed. If we lose 177, watch 172. For the VIX, I think there's going to be a big surge in volatility soon. It's still dropping, looking kind of bearish, so the market may push a little bit tomorrow morning. But then we'll see if the VIX gets a big bounce off 13 or not, and where the VIX goes from here. The VIX is approaching some key support, which is where it bounced off of previously, so we'll see how it does from there. The dollar is still looking a little bullish. If it keeps trying to break out, this could be a bearish signal. So just be a little careful. The dollar is continuing to uptrend quite nicely. Coinbase is down a little bit for the day. We're going to be watching support right here at 222. If we lose this, there's going to be a risk of this coming all the way down towards 216. If we're bullish, we want to see it break 235. The chart does look a bit more bearish, so it does favor the bears a little bit more. So I think that it might pop a bit, then start dropping or come back down towards 210. For Google, I would say that Google is looking a little bit more weak. Maybe looking for a test of 145.8. Could pop a bit and make its way down to 145.8 or just drop straight from here all the way down to 142. We have this gap to fill on Google that could end up getting filled as time progresses. So just be careful. I'm open minded to anything. I'm not sure if we're going to go all the way up to 152 and then reject or come back down to 142. One of those two will likely be tested as we're in between those by about 5 points. So I would say to be a little bit more patient with this. The chart is showing some weakness, so I do see at least 145 being tested and potentially lower levels. So just be careful. For Amazon, Amazon is trying to push right now. The chart looks a little bullish. It may temporarily try to push higher. We could see a test of almost 178 if we do continue to hold above 176. But then if we do push a little bit, maybe we push going into the FOMC meeting. We'll see if Jerome Powell causes a rug pull or not. If we get the rug pull, we're going to be coming back down to 172. If we break out, we could be breaking past 180. It all depends on the FOMC meeting. But I do see it actually pushing a little bit into open. So watch for that tomorrow. Then we'll see what happens after that. But I do anticipate the rug pull. And then finally for Meta got a nice accumulation. It could push higher towards resistance at 498 to 500. If we break this, there's 503.5 coming. So it could push a little bit higher. But then if we end up getting a rejection from this high up here, so if we kind of like pop up to this resistance at 500 to 503, we could be making our way back down towards 490, if not 488. And if we keep breaking past 500, we could be looking for 503.5 and eventually 505. My gut tells me it's going to push towards 500 to 503.5, just a little bit higher, and then we might get that rug pull thanks to Powell. So just be careful. I want to be open minded because I'm not going to make any promises about that, but that is a strong possibility looking at the current data. All right, so with that being said, I just want to thank you all so much for listening. Please have an absolutely spectacular rest of the day. Remain calm, cool, and collected, and get ready for tomorrow. It's going to be a crazy day. Can't wait to see what Jerome Powell and the Fed cause. So take care, do what you have to do, and I'll see you guys in the next one. Thank you for listening, and peace out.